Now, what usually happens when we are trading is we often don't know when to enter. We often don't know when to exit. Most of us, we have the concept, yes. Most of us, we know how to define a trend, how to see where the trend is going and everything, but we often suffer with entry points, right? Now, the most important number one thing is knowing where your trend is going and knowing where your trend is coming from. Knowing where your trend is going allows you to put your take profit points at areas that are necessary, and knowing where your trade is coming from allows you to know how much your trade is moved, how much you're still expecting it to move, where to put your stop losses and your invalidation points. Necessarily, when I say invalidation point, I mean when you see a setup, you enter. Obviously, it's either going to play out or not play out. In terms of any negative move, you have to have areas where you put your stop losses. You have to have areas where you put your take profits in case of a positive move. Okay. So the number one thing that I do almost always is identifying my trend. Where is my trend going? Where is it coming from? Right. So in this scenario, the first thing I'll do is I'll put a line like this, which shows that my trend has been trending down. And as you can see, even if you are a trend line trader, firstly, my trend was going down. I always like teaching concepts about highs and lows. And as you can see here, we had these highs that we had, these highs that we had, these highs that we had, going to the downside, right? Remember, I taught you when you are in a downtrend, you make lows, highs, these lows, these highs, these lows, these highs, these lows, these highs. And as we were downtrending, we can actually see that when our trend was finishing, it had a high here, a low here, it had a high here, it had a low here. But remember what I taught you, if we don't break previous lows, in case of a downtrend like this, but we eventually break a high, like on this scenario, then that means our trend has changed. So of course we were in a downtrend, but our downtrend was ended around this whole area. Why? Because we broke the previous high, right? To make things clear, we had a high, a high, a high. This is not a high. Why? Because this low didn't break this low, but now this is a high because we have a new low which broke this low. And then we had a low here, we had a high here, we had a small low here, we had a high here, we had a small low here, we had a high here, we had a low here, but the high for this low, we don't have it as we can see now. Why? Because it didn't break the previous low. Rather, we see it tried to come back, break it, right? First broke the structural high. This one was a heads up that told us, you know what, I might go in a downtrend. But the moment we broke this high, that's the moment we actually changed to an uptrend, right? Now, the way that you treat your trades is this. I usually don't like telling people to trade retracements retests. Why? Because most probably you can have a fake breakout and then it comes, it retests your price and then it runs away. Right. So the best thing you can do is, of course, you can trade it as a retracement, or you can either use your aggressive or non-aggressive entries. The high that was actually broken and which actually gave us an interest was this one. And the retest actually happened here, right? I've told you before, we have two types of entries, which are aggressive and non-aggressive entries, right? The way that we treat these two entries are these. First, you have to discover your point of interest that you think your price is going to break. Let's say you had seen that your price was going to break here, right? What you do now is, based on your candlestick patterns, I usually like working with morning stars, evening stars. I usually like working with, what do you call this? I usually like working with bullish, engulfing, piercing, and everything. You can either wait for a full break of your area and a close of a candlestick above that area, right? And then check your safe entry, or you can wait for a specific type of setup. Let's say you see your morning star like this. At the moment that you reach the half of it, then you start taking aggressive entries, waiting for your breaking candle, maybe to break an area around this point. Right. Now, the way that I put my stop losses is in this manner. Okay. Let me do this. Okay. The way that I put my stop losses is in this manner. Let me do this here. I always like placing my stop losses on previous lows in case of an uptrend, or on previous highs in case of a downtrend. Right. Remember, we said our entry was taken around this area. Sorry, let me do this. Around this area, right? Meaning that I would have, since this is a 4-hour, obviously, because of the equity that we trade, I can't put my stop loss here on this previous low here. But what I would do is I would fight to find a previous low in a smaller time frame, moving from the 4-hour. Meaning that if I scale in again, sorry, okay, let me do this. My area was here. I forgot that I'm using that. Meaning that if I do this, let me remove those. Meaning that if I do this in my, okay, right. My entry was here, as I said. Let me mark using MetaTrader. It was here, right? And since I said I'm working with a 4-hour time frame, I can't come and put my stop loss here because it will be too far. it's too far to put my stop loss here. So I would scale in a smaller time frame. I take entries in M15. And since I take entries in M15, what I would do was I would come in my M15, check where my entry was. My entry is here, right? If my entry is around this area, what then do? I come and take this low. I put my stop loss around this area and get into a buy. Remember, I'm entering a 4-hour trade based on a 15 minutes entry. And then I go back to my 4-hour. Right. How do I set my take profit points? My previous highs that I was creating when I was falling are actually the areas or my point of interest areas for my take profit. So obviously I would come here. This is a high. This would be my take profit 1. Right. I'd also target this area. This would be my take profit 2. Right. And as you can see, we only had 2 take profits, which were take profit 1 and take profit 2. But I entered where? Here. Right. Now, know this concept. Whenever you see a consolidation after a peak formation or before a break, then those are the areas you want to put your stop loss at. Remember, as we move in trading, we also have the concept of supply and demand. So I would place my stop loss carefully around these areas, because I know that my trade played a lot around this area, because I know that my trade played a lot around this area. So these would be my take profit areas. So imagine having to risk this small and waiting for a bigger move. Right. Now, we often hear people talking about M patterns and W patterns. These can pretty much show up in any time frame that you have. You can see an M pattern in M1, in M15, in M30, in H1, in H4. But the way that we treat them now is a bit different, because you often see some people now, they don't know how to use them. They just see M's everywhere. They just see W's everywhere. So for a simple trick that I use myself, I can't lie and say I have mastered each and everything on the Forex market there. But what I think is necessary, I think I have mastered. So let me do this. I wanted to share my whiteboard. It's not sharing. Let me do this now. I don't know why it's not sharing. Okay, my whiteboard is not sharing. So I'll just do my things on the roof there, right? So let me share my desktop, right? So as I said, we often hear people talking about M patterns. We often hear people talking about W patterns. But the way that I want to treat my W and M patterns is usually, as for me, I like a W that looks like this, and I like an M that looks like, and I like an M that looks like this. Right. There are M's that can look like this, and W's that can look like this. But usually I don't like trading manipulated W's and manipulated M's. If it's not it, for me, it's not it. Right. Remember, when we are uptrending, we leave highs and lows. Our breakout structure goes like this. So for me to validate a bigger move, I wait for this break here and this break here. Right. The way that I treat these is because we were uptrending, breaking highs, breaking highs, breaking highs. So my concept is when I fail to break a high, obviously I must get an M, but an M that has failed to break the high, but actually breaks its low. These are the M's that I always want to see. And if you are downtrending, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, I want to see a W that doesn't break my previous lower low, but that breaks my previous lower high. Why? Because we are downtrending and we have failed to break the previous lower low. Right. Like for instance, I think I just saw the same thing now. We were actually uptrending like this, right? Going in an uptrend, and then we have an M here that actually led to a downtrend. Right. Why do I call this an M? I'm calling this an M because even if I go into my smaller time frame, let's mark this area. This area is our point of interest here. Let's mark this whole area. Let's color it in yellow that we can all see. Okay, like this. So let me scroll back. Okay. Let me scroll back. Okay, this was the analysis that we were doing that time. Let me do this. Right. What I can actually see was here. Let me do this. Oh, sorry. Sorry for that, guys. Sorry for that, guys. Sorry. Let me go again. I know we have newbies that don't understand what they are seeing here. So let me go to H1 where you can actually see more of it. Right? So I'd like to treat this as my M. First of all, I'll talk about it in a complex manner. And then secondly, I'll talk about it in a simple manner. Okay. This is an M, right? Which fell. Right. So what I can actually say is I had this area to break here. Let me do this. Sorry. Let me do this. I had this area to break here. And soon after I got that break of structure, that validated a drop for me. Right. Someone might say, I'm not understanding this. Please, if you master this part that I want to tell you, then you won't have a problem because this is how break-off structural points start. Remember, as we were uptrending, we discovered that we have a high here and our assumed low, right? For me, break of this low, just this low here, let me mark it here. Break of this area here, just this area was enough to give me a heads up that I have switched into a downtrend, right? And when this break over here happened, this validated that, you know what, now I'm in a downtrend. Remember, we do have pullbacks, we do have retracements and everything. But as I said, I took my high here and I took my low here. Had I come to break this high, then I would have said, you know what, this was just a false break here. But for now, I'm validating this break here, right? After validating this break, what do I need to do as a trader? I need to look for candlesticks that make sense. And the candlestick that made sense after this break and validation actually started here, meaning that I had to start taking my entries here and wait for a full break and a fall. And then what happened? My trade went down. So let me do this. So now going back to H4, which is actually, which is actually a time frame that you can see the proper M. You can actually see that we had our first leg of the M here, our second leg, and our break. But that break, we actually took it from a smaller time frame, and then it goes right. So these are the M patterns that I usually want to work with when I'm trading M patterns. So let's now go for a W. Let's now go for a W. Let's look if we can get a W right here. We can actually see that we have a W, and our W looks like this. This is our W. And the middle point of our W is here. And usually break from the start of this middle point usually tells us, you know what, I'm now going uptrend. You know what, I'm now shifting. I'm now changing from a downtrend going to an uptrend, as I said. Right. So let's zoom in and enlighten each other a bit more on that. Okay. Now, us discovering that we have a W, remember, I said I like Ws that look like this, not Ws that look like this. For me, these ones, manipulated Ws, these ones I stress sometimes. But I usually like working with things that are simple to work with. Okay. So after discovering that I have my W, you can actually see that as I broke the midpoint of that W, of course, I came for a retracement, but this validated that I'm now in an uptrend. I always teach this concept. This one is a simple concept. Let me just add to it. After break-off structure, you can always take your Fibonacci in the previous high that it is created, right? Now, I want you to write this down. Whenever you have an M formation trade and whenever you have a W formation trade, when you place your Fibonacci for a retracement, you don't take your entries on the 61.8. Rather, you start taking your entries on the 71 and 72. Unfortunately, this fib on my MT5 doesn't have a fib, doesn't have a 71 and 72 point. I usually like using the web one. So our 7172 point was here, and when our trade reached here, we took it here. You must know the reason why you are using your Fibonacci and trading from the level that you're trading it with. As for me, when I see rejections like this on a Fib, they usually happen on peak formations, M's and W's. Then now I know that the next tail that's gonna come, it's gonna come, grab my money on, grab my entry on the 71, 72, and then it starts heading up. And that's how it's done generally. Okay. So to start off the day with, that's all that I had to share. And also remember, whenever you enter your trade, you always have to target your previous lows if you're in an uptrend, and when you're in a downtrend, you always have to target your previous highs. If I take an entry here, if I sell from here, then that means my stop loss is here. If I buy from here, then that means that my stop loss is here. If I sell from here, then that means my stop loss is here. If I sell from here, my stop loss is here, right? But always use stop losses that comes from a smaller time frame, which is your M15. Sorry, that's our system working here. So if I buy from here, then my stop loss is here. And so, and so, and so. Okay, then there's someone who's asking me, can you kindly repeat what you said about taking an entry using a Fibonacci? Okay, let me repeat that. I was saying, maybe if I draw it, then you can understand it. I was saying, let's say you have your peak formation from a W, and you're now headed upwards. Usually the retracement that you take, you put your Fibonacci here, right? Obviously, and you put it here. And you are hoping to trade from the 50%, the 32%, I mean the 50% and the 60%. The way that we treat peaks of using the Fibonacci on peaks is a bit different than how you use it in the middle of an uptrend or a downtrend. When it's a peak, you don't take your entries around the 60% level, around the 50% level, and the 30% level, but you take it around the 71 and 72% level, meaning that if you don't have that on your Fibonacci, you'd have to add those levels. So every time when you discover it, you don't take your entries on 50, 60, 30. Try to take it on 70, 71. That's what I was saying. Can I get another question? I'm now answering questions for the remaining time. For the remaining time that I have, I'm now answering questions. Can I get a question? Can I have questions? Okay. Yes, you can use, sorry, let me do this. My annotation to, oh, sorry. Now what's happening? Okay. Yeah, you can use the Fibonacci on 1 minute boom and crash, marking out peaks. Don't worry, you can use it. Do you teach TDI? I used to teach the TDI, but I'm not a TDI trader. I'm not much of a BTMM trader. I'm more of a price action smart money trader. How are you teaching smart money concept also? Yes. How does one set up the Fibonacci? Okay, so let's say you want to add any level that you want to add. If you go to your MetaTrader, you can take your Fibonacci, drag it, right click it, then you go to properties. So if you want to add certain levels, then you just click add a level, you put your parameters, and then it's done. And if it's on a phone, you just do the same thing. You click on your Fibonacci. After you click on your Fibonacci, you go to your settings for indicators, you click that Fibonacci, and then you put the parameters that you want to put. Can I answer another question? Which are the best time frames to set a rectangle in a downtrend? Okay. Any time frame is okay, but the entry is what matters. If you mark a flag in H4 in D1 in week 1, if you mark your rectangle in H4 D1 week 1 or H1, it's okay. But the way you enter and your entry time frame is what matters the most, because it's all about timing. What are the optimum entry points on the M1 on boom and crash, assuming there's a break of market structure in the intended direction for spikes from the 61% to the 7 to 170? Okay, when you're trading spikes, usually 61%, 50%, if it's not on the peak. If it's on the peak, 12%, 72%, as I said. The supply and demand work for boom and crash? Definitely it works for boom and crash. Definitely it works. The V50S is going down, right? Right. The way that we analyzed V50S here, where is our V50S? We analyzed it in a way that we saw that it was in a downtrend, but now it has switched from a downtrend to an uptrend. We trade what we see, and we can clearly see that we have new highs and new lows from larger time frames that are being created. If you come and you take your two, this is a high, this is a low, right? Sorry for that. This is a low, this is another low that's above the previous low that we had made. So for now, we are saying that V50S is going up. And even if you take your two here, I'm not much of a trend line trader, yes, but even if you do it like this, you can actually see that it's currently going up. Remember, we had a break of structure starting from here, and we broke another structure here, which we had when we were rallying down. And I'm assuming you are now targeting to break this high, going to the upside. So for now, you can say we are in an uptrend, as you can see. Say we are getting a spike. How do you know the zoom level you are in? Can you please, like, I saw you asked me this question, but can you like ask me specifically what you want to know about this so that I can help? Say we are getting spikes on crash and boom, but we already missed an entry, say on support and resistance. How best can we identify an entry point in this event that we are consistently getting 2 to 3 candles before a spike? Usually I like marking my analysis for boom and crash specifically in 1 hour. So if I miss a point, I miss it. Then now I have to work with the market structure at that point. Where is my high? Where is my low? Am I on a retracement? That's how I take my entries. As simple as that. I don't try to complicate things. V51S is going down there. I took it from above around 20, but I don't know where to put my take profit. As for me, I usually say I trade what I see. And for me, I see that it's currently going to be in an uptrend in the long run, as we also on the analysis. So I don't know, based on your entry and your trading technique, I don't know how you entered and why you entered. So let me try to get a stop loss for you. You entered around 236, 3543. Oh, you said V50. Sorry, I thought you said V50S. I'm sorry about that. I'm very